Hello and welcome to another episode of Coffee and Stocks. In today's video, we are going to talk about what the hell is going on with the market, honestly. This is my reaction to the market. But before we get started, how about we grab some coffee? Alright, so I just want to get one thing straight, and that I'm not a financial advisor. So please do not take my words as advice. This is purely just opinions. Don't forget to drop a like on this video, as well as press that amazing subscribe button, because honestly it does go a long way in supporting the channel. Don't forget, if you drop a comment down below, I will be doing the $60 giveaway, and I will be pulling out the winner this Friday, so please stay tuned for that. Please subscribe. You know, it doesn't hurt at all to just be a subscriber, and I really do appreciate it. All right, so let's go ahead and look at the beautiful heat map. Look at this gorgeousness. And I know it's, you know, it's Halloween, but does it need to be this bloody? Does the stock market need to be this bloody? Look at every single sector, right? Every single sector just crashed. Apple, negative 4.63%. Amazon, Microsoft. You know, Microsoft had a great earnings report yesterday, but you know, as volatile as the market can be, you could have a very positive day and a very green day based on your earnings, but the next day you could crash down like everyone else, and it's freaking amazing how that happens. You know, Amazon negative 3.76%, Facebook down 5.51%, even Google down 5.51%. It is amazing. This is just bonkers. It's wild, right? Now, if we look at the Dow Jones, I don't know if you guys have seen this before, but the Dow Jones closed, look at that, negative 943 points. That is ridiculous. It opened up today at 27,102, right? And then it just went down and 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 down. Coming from yesterday, oh sorry, for 5 day, from the 5-day mark, it's down 5.92%, which is incredible. In the past month, it's down 3.40%, and it's honestly been crashing down since October 12th. And we've seen that a lot more of the stimulus information has been coming out since that date, and they've just been pushing back, and more coronavirus infections and stuff like that. And that's caused this to, you know, have a huge decrease. Now, the NASDAQ also down 426, and the S&P 500 down 119.65. It's crazy. And you know, Jim Cramer puts it in a better way, right? So just listen to this.
The markets have turned a little weaker, now down by 626 points below fair value. You think this is because what we've heard out of Europe today?
Yeah, I mean, I just think that there's going to be a call for lockdowns, the likes of which we're seeing in Chicago, and I think that the lockdowns without the stimulus equals what we're seeing, and I think it's a shame because had there been stimulus, we would then be focusing on earnings, and the earnings are actually pretty darn good, even if it means that some are by cutback, but some are by good revenue growth. So it's almost impossible to avoid the European syndrome. If Merkel's talking about closing bars and restaurants, well, we're not going to do that here because we believe in a version of freedom that is not available anywhere else in the world. But the price to the freedom we have is exactly what Dr. Gottlieb's talking about. And that's the kind of thing where we do a stay in place voluntarily, which means that without being told or being paid to stay in place, is going to continue to produce these numbers. It's very hard to buy a lot of stocks when you see these numbers, and it's a shame too because I think that with stimulus we'd be very tempted to to own some of these stocks, but right now I think everyone's just fearful.
Now, it hasn't been, like, obviously if you look at the S&P 500 in the past year, it hasn't been down as the numbers of pre-corona numbers, right? So back, you know, when we got hit by the pandemic, it was down almost 1,000, right? Even the Dow Jones was down, you know, almost 8,000 points. you know? So 1,000 points to the negative isn't as bad as pre-pandemic numbers, but it's quite near that point, right? We don't want to hear, you know, people closing down because it's bad for business. It's bad for, you know, because that means that more people aren't going to make money. That means, you know, if more places close down, the economy is kind of like at a standstill, which doesn't create more money. You know, and Jim Cramer is right. You know, it's very hard to buy a lot of stocks when you see, you know, these numbers. You know, I don't know if he was talking about Corona case numbers, but I honestly think he was talking about these kind of numbers right here, right? You don't want to see the S&P, the Dow Jones, and the Nasdaq being down this much, because then you personally are like, you know what, I'm just going to hold off for a little bit. Or, you know, if you have those stocks, you know what, I'm just going to sell because I am losing too much money, right? So this is quite a bit of information, and it comes from, you know, Europeans having, they're going, you know, I think they have the effect of the second wave, and I think, you know, they are having to shut down a lot of their, you know, their restaurants, their places, they have lockdowns, which create less money to be, you know, fluctuating and being out there, you know, but it hurts in general. And a lot of the things, it's like, yes, tech stocks did fall pretty hard, you know, they fell pretty hard today, and everyone got hurt, right? So as of right now, you know, they were saying that as of writing of this thing, what's going on? Stimulus is out of cards for a while. COVID-19 cases and hospitalizations are at risk, right? I'll show you guys the maps right now. Deaths are picking up as well. Political gridlock in the law of the land, and weak earnings from Intel and Netflix, and, you know, Microsoft could be a weighing on tech bulls. So a lot of the tech short sellers right now are getting a lot of money, right? They're earning a lot of money because everything is going down, and it's pretty easy to join their club because obviously the virus just keeps increasing right now, especially going into winter season. You know, we have the regular flu, we have COVID that we haven't gone over, and when it's a little bit colder, when a lot of more people are more prone to getting sick, then that means more people are going to get infected by the virus, which has been the number one cause of this stock market to just crap the bed, right? And if we look at the COVID cases right now, this is coming from the COVID tracking project, right? They today, October 28th, they have 1,055,000 daily tests, right? They have 78,861 daily cases. These are new cases. 45,000 people hospitalized, and 1,000 deaths as of today only. The average 7-day deaths is 795, which is pretty high. And as you can see here on the daily cases, this is the first wave, right? This is around the first wave right here. And I know people say it's like, oh, we're on our third wave. Yes, but look at this bottom part right here. This bottom part is higher than our first highest point on the first wave. It's freaking bonkers, right? It's crazy. And even over here, current hospitalized per million people, you see New Mexico, Minnesota, no, not Minnesota, Montana, Idaho. You know, all these people are just getting the worst of it. Don't forget that this side down here is usually warmer than this side up here, right? So they might get affected a little bit higher or a little bit quicker than the people down here. Now, it's a huge struggle with having a whole bunch of people, you know, getting infected, the stimulus bill just being passed, you know, further. And then you have the president just saying, you know what, you know, if I win, if quote unquote President Trump wins, you know, the market is going to go high. The market is just going to go high, and you're going to be able to get, you know, your 401k back. You are going to get your investments back and all that stuff. But we're already almost at November, you know, we're 10 months, 9 months, 8 to 10 months, you know, when we first got hit by the coronavirus. In 8 months, they could have done something about this virus, therefore more people would have been out there spending money and having more that, of that money in circulation. He does say Trump has recent days has touted the stock market as central to his 2020 re-election bid, frequently pointing to Americans' 401k accounts and investment portfolios. The stock market sharp decline clouds this characterization. The president has insisted that the stock market and the broader economy would nosedive if he loses to Joe Biden, at one point claiming that the Democratic presidential nominee would cause a super depression. I mean, if politicians just care about being politics, they need to stop being such a-holes, right? Because they're not putting themselves in the shoes of those who are actually struggling, like ourselves, right? If they don't understand what we are going through, then they're not gonna actually do anything about it. Nancy Pelosi, she's saying, "Oh, we want the best stimulus bill." You guys have been pushing it back and back and back and back for several months now. You don't give a crap. You're just trying to have, a better self-esteem for yourself. How about you get that money out so people are spending money, because people are getting evicted, people are getting kicked out, people are losing their jobs. Some stimulus would help those companies, big companies, small companies, and little companies, get back on some sort of feet. It's like when you're almost drowning and you get a fresh, breath of air. It kind of gives you a better sense of, of what's happening around, and it could really help out. But they're just playing politics. Anyways, this is my reaction to the market today. It's just completely red, and I know this might be a little bad for you guys, but as it goes down, it could go down as far as it went down today, but then it could just go up the next couple days. What am I doing personally? I'm not buying anything new right now. I'm just stashing in my cash. I'm just funding in a little more just in case we do reach another point like this, then I'm able to enter at a lower point, therefore I get a better return. Now, I'm not a financial advisor, so don't take my words as advice. You do your own homework, do your own due diligence, but make sure you do that very smart. And once you do it 100%. All right. So don't forget to drop a like on this video, because honestly, it does go a long way in supporting the channel, as well as press that amazing subscribe button, because honestly, you guys are amazing, and it doesn't hurt to press that subscribe button. But I will be doing a giveaway, $60, if you drop a comment down below, and on Friday I will be pulling out the winner. So I will see you guys next time on Coffee and Stocks.